Quite timely
good
that we
morning.
have you on the show to talk about this with these declines we're seeing. I mean, the story has so many angles and so many facets, but I guess the key question people are asking right now, with all the negative news that we know right now, would you be a willing buyer of these stocks?
I think that if you are willing to take a 12 to 18-month view, this is definitely a buying opportunity, because what is happening here that puts the stock prices down will not impact the fundamentals of this company in any way. And in fact, we've been pointing out that the fundamentals for these three companies has been steadily improving since the first half of last year. There has been some re-rating already before this sector came in. But of course, we need to really get through this, and there could be a little bit more downside from here, because if US investors cannot own these stocks, they need to get out, and there will be selling pressure. But I can actually see interest from non-US long-only investors being interested.
Right.
Evaluations?
Just your best guess. How long do you think these declines will last then? Very, very short term.
Well, first of all, I think the passive investors will get out today, okay, because they have been deleted from the indexes already. So that's why most of the selling by passive investors will happen today. And then for the non-passive investors, they have 10 months to sell. I mean, these US investors. But I also think that most of them, from a compliance perspective, will likely sell over the next week or so. So hopefully that can be over and done with within a week or 2 weeks.
Edison, is this fully reflected in the valuations of these three stocks at this stage?
Well, I guess it is a difficult question, but I have no doubt that if we show the valuation of these three stocks to any investors without showing the names of the stocks, I think anybody would think that this is ridiculously cheap, because they're trading at below 2 times EV to EBITDA, 6-7 times PE, 6-7% yield. And in fact, there is some earnings growth over the next 2-3 years. But of course, when they know the names, they may hesitate because they think that there is technical overhang and there is uncertainty on the regulatory side from the US. But in our view, I mean, the worst has happened already, right? And will there be anything that is worse than what we have seen over the past 5 days on these stocks? Probably not. And as I said, it doesn't impact the fundamental development at all. And they are operating in China. And in fact, the fundamentals continue to improve. So this is really a supply and demand situation for investors. And I think that, yeah, let's say if the situation is not going to be undone by Biden, that means US investors will not be able to buy these stocks. I think there will be enough non-US investors who are willing to take a long-term view that will come in. And in fact, I think over the past 2 days, there is significant amount of southbound buying on China Mobile and also China Unicom.
That's interesting. Shifting the focus away from the geopolitics and focusing on some of the other pressures that these companies have faced, at least in the last few years, is around mobile pricing. Has that pressure eased for these companies?
I, in fact, think the pressure is off, mainly because mobile pricing is extremely affordable to the mass market in China right now. The average spending per customer right now is 40-50 RMB per month. Consumers do not find that unaffordable anymore. They do not complain about pricing anymore. And in fact, the government already stopped talking about raise speed drop price initiative, which has been the central message over the past 4 years, but in fact, they stopped.
All right. So it's start of the year, so it's a good time to ask this question, I guess. What's your forecast or projection for earnings growth, EPS on the three?
I in fact think that these companies can deliver low-teen compound annual growth rate of earnings over the next 2-3 years, driven by mid-single-digit revenue growth, and in fact, lower operating cost growth and also lower Capex growth that will result in lower depreciation growth. We certainly have already seen the official support from the government on more network sharing. And in fact, right now, they will be able to deploy lower frequency spectrum for 5G. And that's why we think that the scale of the 5G build-out and the 5G Capex will be lower than expected. And in fact, the MIT
so lower than
recently set a
expected
target.
Capex.
Yeah, I think the Capex in 2021 will likely be flat versus 2020, or at best like 4 or 5% growth from 2020. So that's definitely below what the market has been looking for, which is 5 to 10% growth.
Any other regulatory hurdles we should be considering when it comes to these three companies?
I think right now maybe the biggest uncertainty here is that what will happen to CBN, which is the fourth operator in 5G. But in fact, they already struck a co-build agreement with China Mobile. And I believe that sometime in 2021, there will be a co-share agreement among all four operators on rural 5G using 700 megahertz. So that's why the incremental impact of CBN as a fourth operator is not a huge risk factor, in my view.